Hey everybody, welcome back. We have a lot to cover. We're going to jump right into it. There's going to be very technical with technical levels. We got nothing else to worry about until Wednesday night. You have a doji here. It's not the kind that you're used to seeing, and it really encapsulated this, but you have the wick to the up and the wick to the bottom. And I want to focus on Nvidia because as goes Nvidia goes the market. Now what we're seeing here is the ability to get over this level, which is going to trigger a lot of buyers, and then they're triggering underneath of us. Now this is exactly what's going on with the entire market right now, and this is a classic example of that. It's happening with the interest rate trades as well. So what I want to do is I just want to mark this off so that you can say it, and then I'll show you it on some other names, and then how you should be looking to trade these kinds of names. So what we're looking for here is to understand that we have light volume absolutely across the board. I don't think anyone would even doubt that. Now if you take those two levels and then we watch this right here, you're going to note that what we did was just off that day, but up here, let's go to it and just mark it off perfectly. Now that we're actually zoomed in here, all they're doing is taking you over and under certain levels, and then they're ripping. Now, for me, this is it's like a pretty easy way to trade. So up here today, we actually bought puts, and then I rode them down. I was not in a big hurry to sell those puts because of Wednesday. What I did was when those puts were in the money, I paid 4 and change for them. They got down here around 7. I married stock to it. And then I just hedged the whole thing on, and I can just leave it on now for earnings. I'm going to walk through that on Saturday if there's enough interest in the comments on how to do this for earnings plays. But essentially, you can quantify what your risk is. And then you don't have to worry about it. You're like, this is how much I can lose, $3-4. And then it goes from there. And as long as I'm actually right at 25. So the most I can lose is what I paid for them, which was $4.70. So instead of making the $3, the way that I was looking at it is, I just want a free trade. I want to get as close to a free trade as possible. That's what I'm trying to do here. But this is a really good strategy because people after hours like, I can't get in. If you could quantify your risk after hours in Nvidia, would you do it? The answer is yes, you would. And this is, it's a little sophisticated, but I'll explain it. I can do it on a Saturday. If there's enough interest, there might not be. So please comment on that. Sometimes it's pretty obvious where there's going to be interest. I'm not sure there will be. But please comment on that below. So we can see our levels here, but this is pretty much what they are doing across the board. So here you take UPST today, which I like a lot. We got over a key level, interest rate sensitive name. They popped us, and then they just did the old Karate Kid sweep the leg. It's everywhere. It's not going to matter what sector you're in right now. You're having very light volume as we await PCE rather on Friday. And look at this. You got over, and then they just stopped. It doesn't matter what it is. If you look at MSTR too, they did it here as well. I'm going to clean this all off. We covered this earlier, but if you look at that level right there, 5181, 5181. Watch up here and you'll say it. 5181, 151.81, and then they pop you over. Everybody gets giddy, right? And then what do? They sweep the leg, and that's what they did again and again and again. What you want to do with this information is go, thanks, Rocky. Now what? Well, here's what you do with it. You understand that you are not buying breakouts right now. So if you learned anything in the first 3 minutes of this video, this is not a breakout market. What you're looking for is retest of support levels. So one of the things I did, this was something I wanted to buy. I bought earlier. When it came down to here, I bought again. And then when it traded up, I stayed with it and I broke even on that other half and I got out of the way. But this allowed me that opportunity at least to get in. I didn't make anything, but I didn't lose anything either. And you can see these tests in here, but it doesn't really matter. Now, another name that would be a great example of this is like the PDD. Even though you completely got demolished today, absolutely demolished, and we will get to the indexes, but I want to get micro. I want to start micro here, and then we'll get into the indexes. When you see these kinds of movements, all you're doing is what? The undercut. This was classic stuff. You undercut, and then you rallied. So all they're doing is stop hunting, and they're doing it on both sides. They're doing it for shorts, and they're doing it for longs. They're doing it over and over again. The weakness in the market was spotted early. And we went over it in the pre-market live, and it's public. So I would recommend that you watch it. If you have the opportunity to join, please do. It's usually packed, and there's a lot of ideas. I take questions, so I don't think I have all the great ideas, and that helps me find ideas for the community. But I pointed this out to everybody, and I just wanted everybody to know that this is point of control. Now, point of control is not VWAP, okay? They can sometimes meet together, okay? But I take the peak and I measured point of control. And what that's telling me is where do the majority of people own the NASDAQ? That's what it tells you, the majority. This would take you the average. You'd average it all together from up to down, and that's going to get you this volume weighted average price, okay? This is the value high, value low. We're not going to get into that tonight. But point of control is a really big level because that's the level where they're saying, hey, this is where the majority of people own. What's going to happen? This is what happened. And that told us that if we ran up there and we rejected, to pay attention to it. It's pretty obvious what happened. We got right up to that level and we rejected. And the same exact thing happened today with the S&P. We went over that level to a T in the pre-market. What I'm getting at here is this is a pretty easy read. Where you stopped right here is a very easy read. Let me show you where we stopped, why we stopped, and what we're going to do about it. So, see this pattern? This pattern's disgusting, by the way. Where you up, Doji has to make a decision. Doji made a decision. Made a kind of like paper-handed decision, but it made one. You made a lower low. Maybe did we undercut and then we're going to bounce tomorrow? Maybe. A couple things here to point out that I think are worth your time. So for example, some people will look at the mark. There's your 9 and then right into that you have the recycle because this bar actually closed up. If this bar did not close up, the mark, just for those that follow this stuff, you actually would have got a sell signal. And I do pay attention to those. Not that I'm going to act on it, but I want to know, just like the 9. So here you are, recycled, now you're going to sit. All right, what does this mean for you? It means that you've got a bunch of things converging right here, and I'll point them out. So number one, to be Captain Obvious, I use a 55, a 12, and a 22. You should use what you're comfortable with. I did talk to a service that's going to allow me to put my indicators in some kind of link, and then you're gonna be able to click on it for free and then have it go right in your trading view. So when that's available, probably this week, I'll just drop it. Then you can have some of these setups just like I have them. I've been trying to put them on trading view for a while, but I think this is gonna be a better solution. Anyway, see how you're holding that 55? That means everything. You need to watch that, and we need to watch how that plays out. After that, you have the 12-22 cross sitting right in here. And I don't know that we're going to break that. But I do know that we did close lower than where we were before. The significance of this is something that we discussed pre-market publicly and also privately in great detail in the room today. The reason for it was you had Jackson Hole. So you had all those puts, all those people here that had puts on the market. That's why you were flat. And when it came time for them to actually act without their hedges, they acted. They got out of the way. So all we really did, the only thing that really moved us was not so much the up volume on Friday. And I went through this in the public video, and I'm going to do it again real quick. So you can go and take a look at this, and you can look at up volume. And this is really important because it allows you to see what's really going on out there. So if I take a look at the up volume, you'll note that here on Thursday and Friday, yeah, like that's good, but it's not this, right? It's not like that. It was the down volume. It was the fact that they just weren't selling anything. Now, why weren't they selling anything? Because they had puts. So they didn't really have to sell anything because they were unwinding their hedges. So even though this looks pretty wild when you look at it, and I'll show you. Okay, this is a pretty wild reading, the up volume divided by down volume. Everyone's posting it, right? It's one of the greatest reads ever. Yet you were hedged in the Jackson Hole, and when they unwound that hedge, now where's the up volume? And we're going to see if it's going to come or not. But I think that that's a really important distinction. Yeah, you didn't have down volume because they didn't need to sell. They had puts. All right, so when you understand what these things are, then you can look at this and make more informed decisions, right? It's always the devil's in the details with this stuff, guys. You always want to look at this stuff. It was one of the key things that I tried to get through today, and I think people did get it. But take the Qs, for example. And if you overlay the Qs with the equal weight S&P, and then you take the S&P itself, which is the market weight. Market weighting, which makes sense. Equal weight is just, there's 500 names, everybody gets 1%. That makes sense, right? But you take the Qs, you take the SPY, and you take the IWM. And you start looking at this. And what you'll note is, if you just take a look at today, and we're just going to do today, watch that pop up at 9:30 right there. And what you're going to notice about this is the Qs are the worst performing. It's not even close. Then you have the SPY, RSP, IWM. All right. So we can talk about this, but the most important thing yet again is here's your zero line where you started the day. So SPY's under, Q's well under. What they're doing, and what I was getting at with the point of control in the Qs, is that they're going to sell tech. And if you know what they're going to sell, then that puts you in the driver's seat. In other words, you can go out there and short tech, short the Qs, you can short the names. For example, knowing this, what we knew, and we'll get to the sectors in a second, but knowing what we knew, it allowed us to go into this trade and do a couple things. Now, I shorted Meta again today, and this was really simple. I'll show you it. But all I was doing was just watching the big seven once I saw that. See, the thing about this is, once you know those things, like you know to look for those, and you go, oh, NASDAQ's the weakest. Okay, well, what are the weakest names in the NASDAQ? Oh, what's the most overweighted name in the NASDAQ right now? It's Meta. It's the most over-owned name across all the names. okay, for all the big seven. So if you know that, then they're going to get out. They're not going to play games. Not with the quarter they had. They crushed it. Why play games? And you could see this over and over again. Anyone could already see this, right? I mean, it's in every single textbook. Left shoulder, head, right shoulder, break. There's your neckline, test, test, test. I mean, anybody could see this, right? So when you start trying to rally, and you can't even get past the first point that's right here, it's telling you everything you need to know. And so all I'm looking for is the opportunity to put this on. And that's all I did. I waited for the opportunity and I put it on. But I knew where to look. And that's what these relative scans that I keep showing you, that's how you use them. They tell you where to go hunting. It tells you where's fertile ground. And that's what you're looking for. Here, watch this. Anything that's broken out is already rolling. Meta, like that broke out. You're already rolling again right there. Meta's already starting to roll. Tech's going to be the weakest, but that's already there. I'm short Meta. So there goes the Meta. Up 2 on the short. Yeah, you got issues, Meta. You got, oh God, got big issues. Up 4, trimmed right into that. Up $4, trimmed a lot of that actually. Pulled $4 out. The next leg down, I'll probably figure out what I'm going to do there. The rest of it. I'd be real careful here. Meta, they can't get out of fast enough. Still short. Are you going to hold here? You're going to hold the 520? Yeah, you're probably going to hold that. I don't like that. See what you're going to do here. I might just close the rest of that short and call it a day on it. So that's a pretty nasty wick for me. I don't know. I'm out 100% out of that short. Dealing with that nonsense. Now, they're always not going to be that easy, but it does tell you where to look. And if you know where to look, that's half the battle. You can see the crackdown, the up, right? And that's just a perfect bear pendant and just follows all the way through. I usually don't wait for the last dollar, but this is clearly that they want out. I mean, I'm going to show you this on AMD, and I'm trying to get very specific. This is just clearly dumping, like just straight up institutional dumping. I mean, you went from 940 to 1035. You went an hour. I mean, what do you have, 12, 13 red bars in a row? You never had to doubt this. When you miss these opportunities, you look for these gap fills where you held before and you wait for them to bounce. We did this as well. And no, not everything we did today worked. But rallies, test, the retest, and then that's it. That's really all you're looking for with these trades. They're very simple trades. And then they provide an opportunity. What you have to understand is that if you're at the tail end of it, you have to get out when the getting's good. You have to get out when you can. Now, there's a couple different spots here too, and you'll see it in here. The one that I liked the most was right here. The first one's usually the most vicious. You tested to get back over and you failed. Tried again, and then once it did that, that was it. They gave you this bar. I entered the short on that bar because you couldn't flip. So the question is, what do you do now, right? You can't possibly look at these and feel warm and fuzzy. You need to see how this is going to play out. The biggest thing for you, if I could tell you the one thing to take away that you need to watch tomorrow, it's the cues. And you must watch this level. If you break 747 tomorrow, 474, sorry, it's been a long day and I don't have time to edit. If you break 474 tomorrow, dyslexia kicked in, then you're going to have a real issue. I think it's going to be way worse than that 12. So what I like to do is go, okay, well, am I in the driver's seat? Am I not in the driver's seat? I am not in the driver's seat. And I'm being very specific technically in this video because this is the way that I can add the most value. Speaking of that, why I'm thinking about it, the wait list is open and invitations are going out. I know people have been on there for a little over a month. Some people have been on there for over 2 months. So invitations have gone out. Be on the lookout for them. There's a lot of people on the list that are trying to get into the community. So once that goes out, it's good for 5 days. And then I cycle through the next batch and it goes on and on and on. So please be on the lookout for that. It should go out this evening. I know it's going to go out this evening because I'm a one-man shop. Anyway, see right in here, 538. So what are you looking at here? And this is what I mean. I'm going to be able to put these in so that you can have them for yourself into this app. And then you'll just be able to click on it and download it directly in the trading view for free. But here's your 3, here's your 5, here's your 8. 3, 5, 8 on a daily, on a 15-minute chart. So these are daily moving averages on what? A 15-minute chart. Got it? Good. I'm not the brightest bulb, so I'll tell you what I do. I color code everything, right? So I know that if I wear certain color pants, I gotta wear certain color shirts, so I know them in order. That's all I know. Red means stop, so I make it like a traffic light. So when this flips and the light turns red, that means stop, do not buy. So if I did that there, look at that. Green means go, right? It's really that simple, guys. So does this work all the time? No, you would have missed this. But it does give you an idea of the trajectory of the move. And even if you use this, it would have got you out of harm's way here, and you wouldn't have bought to here, and what's it telling you here? Yellow means what? Maybe slow down a little bit. Let's see how this is going to go, right? Get it? Red, yellow, green. Good. All right. I would watch this area very closely. This seems to be a problem right here. Now you need to watch that 480 level. What you want to do is you need to close above the 5. If I want to get super technical, and a lot of people just look at the 5 and they only trade the 5, and that's fine. I, again, am not the brightest bulb. And the more that I have, like the 3, the 5, and I can watch how they move, that helps me out greatly. That tells me the trajectory more than just looking at this, right? Sometimes you just gotta clean it all up and just take a look and take a step back and look at what's going on and go, well, that's Friday. And yeah, couldn't close above it on Friday. And look at how that went. And then you would realize that, wait a minute, I just hit a lower high, lower high, lower high. Well, that's not good, and we're sitting here. So the only positive of this, if I had to see one, would be this. And realize that the 55 is right here, right? And you're unable to break that. I mean, that's perfect going into Wednesday night, isn't it? And then Nvidia crushes, and then everyone's hopes and dreams are smashed that is short. That's how I see it anyway, but who knows what's going to happen. I'll trade whatever happens, but I do have a bias. I think everybody already knows that, but I will trade how it goes. It doesn't matter long or short. I'll just flip. But you want to just watch this level right here very, very closely. Right now, that looks like 479.24, and we will go from there. This market is providing a lot of opportunity, though, if you understand the interest rate trade. There are some of these swing trades that we've been in for a while now. They're doing just fine. We got in this in the low 30s. There's nothing wrong with this. What I would say for those that are looking for these kinds of names, look for companies that benefit greatly from interest rates going down. I can't stress that enough. If I'm to look at this, and I'll show you something about this trade in particular, and there's another one that people love to play, but in particular, this trade, if you take a look in this level, and you just, here, I'll show it to you this way so you can see the volume. And pardon my voice, it's been a long, long day talking. If we just mark it from here for a second, and you realize that there's nothing up here, comparative volume-wise. There's nothing in there. A lot of these names that are interest rate sensitive are like that. You could go and take a look at VNO, for example, which you have blue skies above you. Take a look at BK, Regional Bank, another all-time high, right? These are names that people they're not even paying attention to. I'm up $3. I haven't lost a night of sleep. This, it's not very exciting, but I think I'm up about, 4%, and I get 7.5% dividend. I know it's not exciting, guys, but if you're just going to grind higher and you're trying to look for things, the other thing is start looking at the XLP names. Look at Costco and Okinawa today and the all-time high close. And you needed that. You needed to get above this level, and you did. And so all of a sudden, it's a boon to be back in this name. And you take a look at it, now you're up 90 points from that washout. Is this done? Probably not. These are the kinds of names people are going to look for. Consistent cash flow in volatile times. What they're going to run away from mostly is tech. If you take a look at the SOX, for example, and you look at this, the SOX looks just like the NASDAQ, but on steroids. So if I clean this off for a second and I drop in this anchored VWAP from the peak, you're going to see something here. You cannot close above that point of control. And this bar right here, it's almost exact. And this is what I'm focused on when I'm saying technically. You can see where the 9 was, how that played out, and where we're at right now. Now watch what happens when I overlay these, okay? You can't get above the 55. That's an issue. And that's an issue that you're not having in a lot of other sectors. For example, you're not having this in XLF. XLF is the financial sector that's breaking out. Look at RSP. RSP hit another new high today. This is that time where you're going to have to start looking at new ideas. I actually think maybe a week or two from now, we're going to be in a stock picker's market. That's it.